morning, traders. This is Alla Peters on November 13th. Second morning in a row, we're looking at phenomenal correction on S&P E-mini future. This was the market yesterday when price spelled out very clearly, this is not the place to short. This is bearish trend exhaustion. No matter what chart you trade, as a day trader, this is not the place to short. This is a place you monitor for bullish reversal. 24 hours in a row, spectacular spikes on S&P, up to 30 points. Picked up in European session. Shock or not, as expected. From 27.18 all the way to 27.52. Ouch. If you take a look on any day trading chart, you will see that this proprietary Fibonacci levels, proprietary Fibonacci tool that you can install on any instrument, any platform you can choose to trade on, has extremely high accuracy on 5-minute chart. Take a look. Not the place to short, the place to monitor for reversal. This is the place we've been at since yesterday morning, when price reminded you cannot short into institutional and day trading support. What a day yesterday! On the news, market collapsing, in day trading, phenomenal spikes. Phenomenal reminder. Only Fibonacci will keep you out of trouble. This is the market yesterday. Shock or not. 20 points, phenomenal bullish spikes. At the market close, price crawled up a little bit lower. In European and Asian session, buyers picked up the steam and continue respecting this institutional support. Cannot short. What a morning again. And if I convert this chart to 15, exact same formula will remain. What a day. Only knowledge of Fibonacci and price action will keep you out of trouble. If you understand how crucial this support is in front of you when it comes to day trading, when spectacular bullish spikes remain on any chart you trade, when it comes to day trading, this is exact same identical dance we're witnessing right now on weekly chart. Charts are twins. This support had been respected since the start of 2018. If I remove the name from the chart, you would not know the difference between these two. Price action remains the same. The only difference, risk management and trader psychology. Do not short into institutional support. Monitor for reversal. Identical Fibonacci levels. Identical Fibonacci tool. The only difference, risk management and trader psychology. Everything else remains the same. We are only monitoring for long. If price collapsing to reversal zone, this will be even better, as this is where institutions buy. No surprise, as we discussed. This support becoming more and more fragile. just like it is on weekly chart. This support is out, market in free fall to 2500, 2300, 2100. What S&P is doing in front of you on day trading chart. We don't know how long the price will hold this support. All we know, it's fragile. And all we know, price collapsing to reversal zone and rules are met, only then you can take a trade. Here is a reminder of this exact same end of minor trend to the upside in 2016. To remember 2200 number that show you very clearly. This level is out, S&P will head to 2300, 2500. How long did S&P struggle to 2200? For months and months and months. More than 6 months, until November 2016, when bullish rally picked up the steam and this level was broken and price skyrocketed to 2300. Shock or not. And price skyrocketed to 2300. Higher and higher, all identified in advance. And this comes 2018. Market starts selling off. Shock or not, as expected. Bullish rally that started 2 years prior, that taken 6 months to break through institutional resistance, 2200 reached institutional reversal zone. Shock or not, market starts selling off. This is 2018. Ouch, ouch, ouch. Market and sell-off. The only thing that's holding the market is this key support. This support is out. 2500 to the downside is next. Do remember, this was a level to the upside. This was reversal zone to the uptrend. Present in the room for years. Market is flawless Fibonacci puzzle. Using anything else is a waste of time. Fibonacci is the only natural predictive tool. Nothing else has matter. This is a key on S&P. First things are first, this is the end of the minor trend, 2600. This support is out, market will go into free fall, with 2500 being crucial support. So, this is what's playing out in front of you this morning on day trading chart. Identical strategy, identical formula. So pay attention to 2600. Just like knowledgeable trader did, pay attention to 2200. It's all the same. Day trading not your cup of tea. Use everything you learn in the course for your long-term investment decisions. So, this is S&P right now on your day trading chart. It would be so refreshing if we would crash through this support to here. It would be a gift, because this is where we're expecting serious institutional pressure. Why? Because it's a reversal zone on daily chart. You're using daily, you're holding position for days and weeks. This is a place where institutions stepped in from last time. Shock or not, this is even better. And as we expected, this will be war zone. This chart been present in front of you since last summer. Do you want to trade daily? Choice is yours. Do you want to hold position for days, weeks, and months? Trade weekly. Do you want to hold position for minutes? Trade daily. Absolutely up to you. On QQQ, this was key resistance, not a place to buy. QQQ did not succeed breaking through this resistance. S&P did. It's all the same. This exact same support is where Tesla been rallying from. It's all the same. Let me remind you, Tesla, many months ago. Shock or not. Do you remember Tesla in April 2018? Key support respected, do not short. Exact same thing you're seeing in front of you on S&P this morning. Exact same thing you're seeing on S&P weekly. This is Tesla now. Between reversal zone and exact same key support where buyers stepped in from in the last 2 months. However, reversal zone is blocking the rally. It's all the same. Is S&P respecting this key support just like Tesla in front of you? Of course. Market becoming as interesting as on Tesla. Key moment on S&P. S&P is doing exact same thing as Tesla, exact same thing as weekly chart, respecting key support. Cannot short. As we discussed pre-market, as we discussed since yesterday morning, if you're shorting near the support, your success rate less than 10%. This is how Fibonacci keeps you out of trouble. Nothing else will ever give you this much accuracy. Every single chart that I have in front of me does not have an indicator. Zero, zilch. That's what I teach you in the course, how to trade indicator free, how to use pure price for entry and Fibonacci for exits, with rules. Nothing else matters. That's what I've done since 2007, removing all the indicators from the chart and questioning everything about price, recognizing that market formed by Fibonacci. And if you know how to identify Fibonacci correctly, you know where price is going to next. Art of war, as one of the graduates said. Fibonacci show you what your opponent's move will be in advance. How powerful is that? Nothing else ever will. Since yesterday morning, all the news screaming market in free fall. In day trading, spectacular bullish push. 20 points during markets, 30 points in Asian and European session. And here's ultimate reminder. Don't listen to the news. Pay attention to price and Fibonacci only. Bullish pullback in a play again and again and again. Ultimate reminder, when you're dealing with equal buyers and equal sellers, and you know where the end of the minor trend is, this was expected. Just like 2200 on S&P to the upside. As we discussed prior, both trends remain equal. What a pain. Exact same dance on weekly chart. Key resistance price was not able to break through. And this key support, as I warned you the entire morning, do not short. Should not be surprised what played out from this level, as again it's named Reversal Zone. Price reverses completely 80+% of the time, as it did just now. As again it did so on long-term investment chart when price was at 1800, and again as price put up the war zone at 2200, as it did this morning at 2743. Correct? It's all the same. Where did Amazon buyers stepped in from? Shock or not? 500 level. Trend inception. If I walk you down memory lane, you will remember. This was sell-off on Amazon when Amazon reached reversal zone at 700. What did I say as posted on all the public forums, LinkedIn, and presented at hedge fund conventions? Amazon heading to 500. Bright green line. Shock or not on monthly. And Amazon did so. Spectacular earnings did not mean a thing. Fibonacci meant everything. Trend inception on weekly. Exact same place for S&Ps right now. Amazon comes out with spectacular earnings, don't mean a thing. Fibonacci means everything. And this is the reason S&P is rallying this morning, just like Amazon had done. I removed the name from the chart so you wouldn't have a clue what this is. Price action remains the same. Respect news due to volatility, but pretty please. Stop listening to the noise and pay attention to what matters. If you would have bought Amazon based on spectacular earnings, ouch, not the place to buy. The place to exit. Rules are met, enter the trade. And that's exact same thing on S&P this morning as 500 on Amazon, as Amazon reached 2000. Shock or not. So if you would like to join us in the courses, if you would like to trade like a pro, dive right into Fibonacci Mastery Group course. Course is ongoing, first time in 8 years of teaching. The method to traders from beginner to hedge fund trader. I am recording classes because we are in the middle of historical formations. So the moment you sign up, you have opportunity to review prior classes. Mastery course 12 weeks. This is group course. I'm with students 5 days per week. All spelled out on the website. If you would like to dive right into Mastery Mentoring 6 months course, including all group classes. And if you master basics, if you master mastery, I can take you very far. All depends how much you want to learn. Mastery course 6 months includes access to all group classes, includes access to all group sessions in Mastery and Foundations course. If you would like to master foundations of the method, Start any day, start any time, and review prior classes. This is the first time ever in 8 years of doing this I'm offering Foundations course. Never been offered before. This 8-week Foundations course includes also access to the trading room. All prior classes had been recorded. I am with students on Thursday after trading room close. Currently Fibonacci Foundations 50% off for a limited time. So please review the information on the website. Please see what students accomplishing. As students' story, the reason I live and breathe what I do. Never hesitate to contact me, please. But first, review the information on the website. Thousands of emails from graduates, from beginner to hedge fund trader, who are trading the method in US and globally. What you will decide to trade, absolutely up to you. Any questions? Look forward to hearing from you. 925-257-4298 or info@fibinstitute.com.